So here we are, Granada gold mine. Now, if you look at the picture, actually this was a former producer. All that waste pile and all that, actually that's been there since the 30s with environmental liability. So what we did was we cleaned that up, and actually it's being sold and money's given to the charity and also to some of these former or people who want to become Olympians. One of them was a snowboarder we financed, or another one we financed was I think a rower. Is it possible? I can't remember. He came to me and I gave him money. Anyways, he was quite nice. So if you look to the left or right, you know, when I said there's a fair amount of native gold, that's actually what our core looks like. The amount of gold in the core goes anywhere from 42 to 70%. The way we drill this deposit, we actually did what we call drill for structure, old school, and then we mine for grade. That's why we're trying to do about 9 million ton bulk sample. So here we are. Where is the Granada gold mine? It's actually located in the city, near the city of Granada. It's on the Cadillac Trend. So if you look at a Cadillac Trend, you'll find the thing goes Quebec, Ontario, all the way to northern Manitoba. So right now what we have is, we have what we call our resources, what we call a constraint pit resource. Originally was about 2.6 million on surface, so we brought it down to about 800,000 ounces. We found that actually making a smaller open pit and going underground is actually more cost effective because of diesel fuel costs in Quebec, how they do it. So we're looking at about 800,000 ounces on surface, about 1.2 grams a ton, and we think we might have an inferred about 10 million tons, about 4.6 grams a ton, 1.5 million ounces. We only explored about a small part of the structure. It's about 5.5 kilometers long. We explored only about 2 kilometers of it. So here's what happened in the past and what we're doing. So actually it was a former producer, like I indicated, that did about 52,000 ounces in the 30s, about 10 grams a ton. There's a fair amount of drilling before we acquired it, about 500 shallow holes, about 20,000 meters. When you look at the data, that's where we pick up the property. There was a bulk sample done in 93, 94. This is open pit, and they took a grade out of 5.2 grams a ton, 87,000 tons. Again, in 1995, the same group apparently took another bulk sample out, 22,000 tons, grading about 4.5 grams a ton. Year 2000, they took out about 2,300 ounces. So we acquired in 2006. The first thing we did a fairly large bulk sample. Actually, it should have been about 450,000 tons. We did only about 140. We took over a mill. We put 30 through the mill. And the drill indicated grade should have been only 0.7, came back at 1.62. Then we sampled the waste pile, which is about 110,000 tons. And then we found out the waste pile sampled 1.74. So we took 19 samples with a 4-yard loader. I didn't send a geologist out because they always pick up the shiny stuff. So it was 19 samples, 3 runs. We averaged them, threw away the highest one, and the waste pile graded higher than what we put in the mill. So we looked at the bottom of the floor on the first level, and we found out, in addition to the vein, is these little veinlets. The little veinlets is where majority of the native gold was, so that was very hard to quantify. So our first resource estimate, like I said, we did in 2012, about 1.6 million ounces measured indicated, 1 million inferred, a little over a gram. At that time, everybody wanted another Osisko. Of course, we're not another Osisko. The deposit is not that type. The geology is not there. We did our first PEA in 2012 for 100,000 ounces a year, so it looked good. So we thought, let's carry on. 2014, we did a PFS to do the rolling start. The rolling start is actually the bulk sample. The bulk sample is 25,000 ounces a year for the first 2 years, and after that, we're going to try to go to 80 to 100,000 ounces a year. Actually, we hired somebody to do an FS. They're behind schedule, and we might have to change them, but the intent is we really want to do this rolling start. So we want to see, does our drill program make any sense? So here we are. Here's the Cadillac Trend. You'll notice our next door neighbor is the Malartic Mine, Osisko, to the east, about 65 kilometers. We're below the Cadillac Trend. We're south of it. Different type of geologies, but if you're on the Cadillac Trend, it's just like an address. Best address to be on Quebec, Ontario, all the way up to northern Manitoba. If you're going to find something there, it's usually in the millions of ounces. So here's our property. It's actually quite small. When we first started, we have 77 hectares. And after we did our bulk sample, we just grabbed everything. We just, in Quebec, it's map staking. You open up your laptop and you just staked, and we grabbed 11,000 hectares. And after we did the drill program, we found out, there's a structure, it's 5.5 kilometers. So we only kept what we thought was good, let everything go. So we're down to about 2,400 hectares. The thing seems to go east-west. It's about 5.5 kilometers long. We only looked at 22 kilometers of it. So what we're looking for here is, like I said, we hired somebody to do a feasibility study. They're very busy. I think they're behind schedule significantly. So what we wanted to do is actually run an open pit after the rolling start for about 8 to 10 years, 80 to 100,000 ounces a year. And the feasibility study is only for the open pit, not the underground. Our intent is also to extend the strike length, so we got our permits to go to Okeko. It's a little distance from where we are. In Okeko, they took about 300 tons, running 240 grams per ton. We were there this year. We found a little more than we expected. We haven't reported everything until we're certain that it makes sense. We're also looking at, right now we put a news release out just today. We did a born drone geophysic. It was unbelievable how quickly that was done. So we started drilling what we call this heat engine. It seems to be lining up with our historical drilling, the program. So it's about a $21 million program over 2 years, and we're looking at adding 10 to 15 million tons, 4 to 6 grams per ton, and this is underground. And of course, at the bottom says contract milling. So Canada Cobalt Works would be contract milling, 600 to 2 million tons of rock from Granada. And so, of course, Canada Cobalt will make some money on this. So we did some trenching, like I said, at Okeko. We started this year. We found multiple structures. The best structure came back at about half a meter, grading 8.5 grams per ton. So here's our target, or what we call the big claim. You'll notice at the bottom, there's a lot of little dots. That's all the holes. There's something close to over 1,000 holes drilled, 120,000 meters. And when you look at the geophysical or the drone borne mag, you'll notice everything lines up with our drill program, even though we didn't have it. So right now we're doing the Genesis target. We actually started drilling that, and actually lines up well with the work that's been done. So here's a cross section of what it really looks like. It's actually 400 meters thick. It's about 50 degrees from horizontal going towards the Cadillac trend. So we did drill out of the zone, so to speak. Some of the results did come out of the zone. It's multiple vein structures, about 9 to 22 veins trending east-west. So basically what you're looking at over here, we do have the main pit, final pits. It's kind of hard to see. It's a bit of a green line, but the red is the measured, the blue is the indicated, the gray, of course, is all inferred. So majority of what we're trying to do right now, drill, is what we call in the gold area. And I think in that area we might find a fair amount of gold that's giving us what I'll call significant numbers. So here's our property again. You're looking east-west. You'll notice we spent most of our work on shaft 1 and 2. We did some work at Okeko. We actually extended, applied and extended for permits in Austin Ruin. So the distance between the Austin Ruin shaft 1 and 2, and you notice it seems to be in a straight line, is about 5.5 kilometers. We only explored 2 kilometers of that. So we're not saying that it's all mineralized, but interesting numbers just the same. And these are all done some time ago. So here's our resource, what it looks like. We did what we call a constraint resource. It's after we did about 22,000 meters of drilling. So a measured in-pit constraint resource, about 625,000 ounces, 1.14 grams a ton. Indicated, about 182,000 ounces, 1.3. Combined measured indicated, about 807,000, 1.2. And this is what we're looking for. This is that's the feasibility study being done on that. That's all we're looking at right now. Inferred, we feel we might have about 10 million tons, 4.6, and giving us about 1.5 million ounces. So when we compare our resource calculations, you'll notice between 2012, 2017, measured and indicated basically stay the same, 1.5, 1.6. Our inferred really took off, went from 1 to about 3.4. Let's see what we have here. So, okay, here we go. What we're trying to do going forward, we're trying to still carry on with a feasibility study. Even though the mill might not be built for at least 3 years, we'd like the feasibility study completed and then shop around for financing. We have an MOU to custom mill, like I said, with Canada Cobalt Works. We're looking at processing a minimum 600,000 tons, grading 4.2 grams a ton. Exploration, we went up to Okeko. We found a lot. Best number was about 8 grams over half a meter. We found a lot of other stuff there. And right now we're drilling the Genesis target. This is basically a 3-year, $21 million drill program. And we only explored, like I said, 20% of it, so we're looking to exploring at the remaining 80%. So there's something else that a lot of people weren't aware of. So I was surprised when I was in Germany. I thought everybody knew what we're doing. There's something we set up for our shareholders at GGM. We actually got a dividend. It's called a dynamic dividend. So when we spun out, when we got an offer for Granada, we spun out the Castle assets because the people who are going to take us over will give us nothing for the Canada Cobalt or for the Castle assets. So the way it was structured with the exchange is whereby we're allowed to give about 10 million shares to the shareholders of GGM. GGM was not allowed to touch it. We only were, I would say, administer it on the behalf of the GGM shareholders. So every year, basically 2.5 million shares were given out at 5 cents. In addition, we gave another 2.5 million warrants at 10 cents. So basically this year, if you look at it, you know, the stock went up to 80, 90 cents. We're trading at around 40 cents, 50 cents right now. You know, when you figure it out, basically, you got a pretty good percentage dividend, only for GGM shareholders. The other thing we set up was kind of a unique thing. We created a kind of a unique structure whereby the shareholders own the royalty. So the shareholders, not GGM, owns the royalty. So they own the 3% royalty. So in other words, somebody takes over GGM, they get the company, but not the royalty. The royalty stays with the shareholders. Same thing was done with the shares of Canada Cobalt. If somebody took over GGM, they still got the shares. If you're a shareholder of Granada, regardless who took you over, you still got the shares of Canada Cobalt Works. So here we are. We're actually trading a little below 15 cents. We're at 13, 12 cents. We put a pretty good news release out there. We've actually done very little marketing on this story. We have a market cap of 9 million, about 60 million shares, fully diluted 80. Insiders own about 3%. And that's about it. So if there are any questions, please ask. I thank you very much for listening to us.
You recommended the drill program, 27 million, it seems like.
21 million.
21 million, that's a huge number to recommend.
Well, we spent 57 already, and actually, when you look at it, it's unbelievable what, you know, each hole, it's unbelievable. The deep holes that we wedge off them is 200 grand. You can't get a good rate in Quebec. I can get a good rate in Ontario, but not in Quebec. It's, you know, each hole is 200, and we do 3 wedges off them. And most of the holes are like over a kilometer. Like what we do is 50 degrees perpendicular. Yeah, you know, that's why we put it like that, because we tested it first, second quarter of 2017, and basically each hole was 200 grand.
So that's to expand the underground reserve.
Yeah, I tell you what they did to us. Quebec's kind of interesting. You know, they changed the way they do fuel in Quebec. So in other words, for example, I'll give you about how they do it. In Ontario, you can use colored on anything at any time, no problems. In Quebec, what they do is you come inside with your equipment and they put a license plate on a bulldozer. They put a license plate on the screening plant. There's not even a seat on that. The minute you put a plate on that, you can't use colored. There's a 30% difference, eh? So that 30%, actually, you know, when you look at our cash cost per ounce in the open pit, it's about a quarter of our cash cost is diesel now. So if it's $800 an ounce, $200 an ounce is diesel. And it's not going to change. So we thought, fine, make the pit smaller, go underground, have better control. And you know what? Quebec power is so cheap. I go to electric scoop trams underground, electric trucks. I'm further ahead. It's just the economics.
Okay. You have a huge inferred tonnage here. Is that what you're going to be primarily drilling off?
Well, that inferred is actually the way they did it. I didn't agree with the way the geological people did it. It's not fairly representative. The inferred should have been smaller. But the geological people, I disputed it, but they said, no, Frank, we did it right. I'm okay with that. So we're okay with that. Yeah. The grades, actually, we diluted by design. I think the grades would be higher, but I think the ounces needs a lot more work. And we're only looking at a small footprint. In other words, we're just doing the big claim. The reason we're doing the big claim is because of the way things are done in Quebec. We have 2 leases on the little bottom claims, and we spend most of our money in the big claim area, so it's easier to get a lease. Eh? Yeah, you have to spend a lot of money, you have to do a feasibility study, you have to do all these studies, then they'll give you a lease. Eh? And that's why we are drilling the big claim.
We don't have any questions from the webinar, so if everyone's all right within the room, let's conclude this presentation from Frank Basa. Thank you for joining us. Thank you everyone for coming in. Thank you webinar participants. We will see you next time.